Hey everyone, welcome back. We've got a pretty interesting economic picture shaping up for 2025.
Yeah, lot to unpack.
We'll be looking at inflation, those potential tax cuts the new Trump administration's been talking about,
And we can't forget the stock market.
definitely how it's been performing, and if there's an AI bubble that's about to go pop.
Plus, what's happening with housing.
Oh, right. The housing market is always a roller coaster. Before we dive into all that, though,
Yes,
if you're finding our insights useful and you want to stay ahead of the curve,
it'd be fantastic if you could.
subscribe to the channel and like this video. It helps us out a lot. Okay, let's kick things off with something that's been hitting everyone's wallets lately. Inflation.
It's definitely been a pain point.
Everything seems to be more expensive. It's tough to keep up.
No kidding. The consumer price index, that's the CPI.
Right. That measures how much prices are changing.
Exactly. Well, it jumped up 2.9% just in December.
Wow, that's steep. What's driving that increase?
Groceries and gas, mainly. Those are really pushing things up. And even if you strip out those food and energy prices, which can be volatile.
Core inflation, right?
Yeah, core inflation is still at 3.2%. That's pretty stubborn.
So wages aren't keeping up with these price hikes, are they?
Nope, wages are only about 1% higher than they were last year.
So people are effectively making less than they were before.
That's the bottom line. The average worker is actually taking a 2% pay cut when you factor in how much inflation is eating away at their purchasing power.
Ouch. So what can be done? Do you think these tax cuts Trump's proposing might make a difference?
It's tough to say for sure at this point.
They're just proposals, right?
Right, we need to wait and see how they actually get put into practice and what the real impact will be. But they could offer some relief, potentially. One idea is to make those 2017 tax cuts permanent.
I remember those.
And there's been talk of cutting the corporate income tax rate even further, down to 15%. It's currently at 20%.
I guess the hope is that this would give businesses a boost.
That's the thinking, yeah. Help them grow, invest more, which would hopefully benefit the overall economy. But there are definitely some different opinions on that.
Some people say it'll just help big corporations.
Right. And that it won't really trickle down to average workers.
That's always the debate, isn't it?
Yeah.
Then, of course, there are those tariffs.
Oh, yeah. Those are always a hot button issue.
It seems like every administration has their own take on tariffs. What's the thinking with these new ones Trump's proposing?
Well, they're aimed at encouraging more companies to produce goods here in the U.S.
So instead of relying so heavily on imports.
Exactly. The idea is to boost domestic production and create more jobs here at home.
It makes sense in theory, but
But there's always the risk of unintended consequences. Some people worry that these tariffs will just lead to higher prices for consumers.
and potentially even spark some trade wars,
It's definitely a delicate balancing act. You're trying to protect American industries and jobs.
while also keeping things affordable for consumers. It's a tough one. What about some of these other tax proposals? I know there's been some talk about exempting overtime pay and tips from federal taxes.
Oh, right. That one's interesting. On the surface, it sounds like it could really help workers bring home more money.
But I can also see how it could be kind of tricky to implement.
Definitely. There's always the potential for abuse when you start creating tax loopholes like that. The devil's in the details, How they actually set it up would be really important.
Makes sense. There's also that proposal to get rid of taxes on Social Security income. That would be a huge help to retirees.
Yeah, it would put more money in their pockets. But some people are worried about what it would do to the tax system as a whole.
Could put a strain on it, I imagine, and maybe even impact the Social Security fund itself.
It's definitely complex. It's not just a simple win-win situation. There are trade-offs to consider.
We also can't forget about the SOL cap deduction.
Oh, right. The cap on those state and local tax deductions.
I know a lot of our listeners in those high-tax states are keeping an eye on that.
For sure. Lifting that cap could mean significant savings for some people.
And finally, there's that proposal to eliminate those clean energy tax credits,
Yeah, that one's a big deal. It would definitely have a ripple effect.
especially on the electric vehicle market, I'd imagine.
Oh, absolutely. It's a pretty significant policy shift, and it could really impact how quickly electric vehicles get adopted. It's going to be fascinating to see how it all plays out.
So a lot of potential changes on the table with these tax proposals. It's going to be interesting to see what actually comes to fruition. Now, let's switch gears and talk about the stock market. It's been on quite a tear lately. I mean, the S&P 500 is up over 23% in 2024.
After already jumping 26% in 2023, it's been quite a run.
It has. But it seems like a lot of those gains are concentrated in just a handful of companies.
It's true. Google, Apple, Amazon, Meta, Microsoft, Nvidia, and Tesla, they've been carrying a lot of the weight.
That does seem a little concerning, all those eggs in one basket. Some people are even saying we're in an AI bubble that's about to burst.
Dot-com bubble back in the late 90s.
Exactly. Are we headed for a similar crash?
Well, there are definitely some parallels, and this new Chinese AI company, DeepSeek. They're operating at a fraction of the cost of their American competitors. That's got some people worried. Could be a sign that things are overinflated.
So what's the outlook for the stock market in 2025? Will it keep going up? Are we in for a correction? What are the experts saying?
Well, Goldman Sachs is predicting that the S&P 500 will end the year at 6,500.
A 10% increase. That's still pretty optimistic.
It is, and Morgan Stanley and JP Morgan Chase seem to agree with that assessment.
I've heard Oppenheimer is even more bullish, predicting a 20% increase.
Yeah, they're definitely on the higher end of the spectrum. But you have to remember that even the most sophisticated analysts with all their data...
They don't have crystal balls, right?
Exactly. They get it wrong all the time. A lot of those predictions for 2024 were way off the mark.
It's a good reminder that the market is inherently risky. You just never know what's going to happen. Speaking of markets, let's talk about housing.
Oh, yeah, that's been an interesting one.
It's been surprisingly resilient considering those sky-high mortgage rates. I mean, rates are over 7%.
You'd think that would put a damper on things.
You would. But housing prices still went up by 3.4% in 2024. What's going on there?
Well, for one thing, there just aren't that many homes for sale. Inventory's still pretty tight.
Low supply, high demand.
That's part of it, yeah. And a lot of people who bought homes a few years ago locked in those lower mortgage rates, so they're not as affected by the current high rates.
Oh, is it staying put?
A lot of them are, yeah. Which further limits the supply of available homes. It's creating a bit of a bottleneck.
Interesting. So what's the outlook for 2025? Are prices going to keep going up?
Most experts seem to think so, but they're expecting the pace of growth to slow down a bit. Zillow is predicting a more conservative 2.6% increase.
While others are saying something closer to 3.8%.
Yeah, somewhere in that range. But Zillow is also predicting that we might actually see a buyer's market emerge.
Oh, really? A shift in the balance of power?
They think so. They're anticipating more inventory coming online, which could give buyers a little more leverage. But they're also expecting mortgage rates to remain high and potentially become even more volatile.
So a mixed bag for buyers. It sounds like it might be a good time to start looking if you're in the market.
It might be, yeah. But be prepared for some competition and be ready for those interest rates to potentially jump around a bit.
It's a good reminder that even in a strong economy, you need to be smart about your personal finances. Do your homework, shop around.
Absolutely. Don't get caught up in the frenzy. Make sure you're making sound decisions.
It's all about finding that balance, right? Taking advantage of opportunities, but also managing risk.
Exactly. And speaking of managing risk, let's talk about the Federal Reserve. They play a big role in all of this. And Jerome Powell, the Fed chair, has signaled that they're hitting the pause button on interest rate cuts for now.
So no more cuts for a while.
It's not set in stone, but that's their stance for the time being. They're aiming for maybe 2 small cuts, 25 basis points each, by the end of 2025.
But they're going to be watching the data closely, right?
Very closely. Inflation, asset prices, the unemployment rate. They're trying to strike that delicate balance between keeping inflation under control without stifling economic growth.
It's a tough job, for sure. And then, of course, there's always the potential for political pressure.
Right. Some people are speculating that the Trump administration might push for faster rate cuts.
To boost those asset prices.
Exactly. We saw something similar happen back in 2018. It'll be interesting to see how the Fed navigates that. But for now, it seems like they're committed to their independence.
Making decisions based on the economic data, not politics.
That's the message they're sending.
Well, we've covered a lot of ground in this first part of our conversation. Inflation, tax cuts, the stock market, the Fed. It sounds like there are both reasons for optimism and reasons for concern about the economy in 2025. Would you agree with that?
I would. It's definitely a mixed bag. There are signs of strength, but there are also some significant uncertainties on the horizon. We're in for an interesting ride. It really highlights how political decisions and events around the globe can have such unexpected effects on the economy.
Absolutely. And speaking of political decisions, let's go back to the Fed and those interest rates. Their pause on further cuts seems pretty cautious, don't you think?
Yeah, they're walking a tightrope right now, trying to keep inflation from spiraling out of control, but also not wanting to slam the brakes on economic growth. So holding off on those cuts suggests they're prioritizing the inflation battle, at least for the moment.
Makes sense, especially since they're aiming for that 2% inflation rate, and we're still above that.
Exactly. Plus, they're keeping a close eye on asset prices and, of course, the unemployment rate. If unemployment suddenly spikes, that could be a warning sign that the economy's weakening. And then they might have to act faster, cutting rates to try and stimulate things again.
So for now, it's a lot of watching and waiting, letting the data guide their decisions.
Pretty much. But we can't ignore the political elephant in the room.
Oh, right. There's always that factor.
There's a lot of talk that the Trump administration might start pushing for more aggressive rate cuts.
To try and pump up those asset prices.
You got it. We saw them do that back in 2018, remember? So it'll be interesting to see how the Fed handles that pressure this time around. But so far, they seem pretty determined to stick to their guns.
Staying independent, making decisions based on what's actually happening in the economy.
That's what their statements indicate, at least. They're emphasizing a data-driven approach, responding to real shifts in the economy, not just playing politics.
So we've covered a lot: inflation, potential tax cuts, the stock market's performance, and where the Fed stands.
Yeah.
It feels like 2025 is shaping up to be a year with both potential upswings and some areas of concern for the economy.
Yeah, that's a pretty fair assessment. It's a mixed bag for sure. Some bright spots, but definitely some big question marks out there too.
Like what in particular? What should people be keeping an eye on?
Well, we still don't know the full story on those proposed tax cuts, how they'll shake out. They could give the economy a shot in the arm, sure, but they could also balloon the budget deficit even more, maybe even exacerbate income inequality. Those are serious considerations.
And those tariffs, they're a wild card too. They're supposed to protect American jobs, but could also spark trade wars that just end up hurting consumers with higher prices.
It's a tricky tightrope to walk, no doubt. And then there's the whole global economic landscape, which we can't ignore. China's growth is slowing, Brexit still having ripple effects, geopolitical tensions are simmering in various places. All of that can spill over and impact the U.S. economy.
Sounds like we could be in for a bumpy ride. So what advice would you give our listeners who are trying to make sense of all this and figure out how to be prepared?
Stay informed, absolutely. Keep up with the economic news. But don't get bogged down in the day-to-day noise. Don't panic, but don't bury your head in the sand either. Diversify your investments, spread the risk, and be mentally prepared for those market swings. They're inevitable.
Always good to have a long-term perspective, right? Not get spooked by every little dip in the market.
Precisely. Investing is a marathon, not a sprint. Markets go up, they go down, but over time, they tend to go up. So patience and discipline are your best allies.
Well said. Now, let's shift gears back to the housing market, because that's been a wild ride lately. It's been fascinating to watch it defy expectations, with prices still climbing despite those super high mortgage rates.
It has been a head scratcher for some people, but as we talked about earlier, those low inventory levels and sustained demand are really fueling this.
So what's the forecast for 2025? More of the same, or is there a chance things might cool down?
The consensus seems to be continued price growth, but at a more moderate pace than we've seen lately. But some signals suggest we might be at a turning point.
Like what? What signs are you seeing?
Zillow, for one, is predicting a possible shift towards a buyer's market. They're expecting more inventory to become available, which could give buyers more negotiating power. But they're also saying those high mortgage rates are probably going to stick around and might even become more unpredictable.
So potential buyers need to be ready for a competitive market and maybe some interest rate roller coaster rides.
Definitely. And affordability is key. Prices are still inflated in many areas, so buyers need to be realistic about their budgets. Don't get in over your head.
A good reminder that even when the economy seems strong, it's important to be smart about your personal finances. Now, what about the rental market? What's the outlook for renters in 2025?
Well, with that slowdown in multifamily construction, we're likely to see rents keep climbing in a lot of places. And that could really squeeze renters who are already struggling with those rising costs we talked about earlier.
It sounds like both buyers and renters are facing some tough challenges out there.
There's no denying that. But as with any market, opportunities exist for those who do their research and plan ahead. Stay informed about your local market, find good professionals to work with, and make sure you're making solid financial decisions.
Excellent advice. But I think it's important to remember that all these economic indicators and forecasts can sometimes feel a bit abstract.
Absolutely. You know, it's one thing to talk about those big macroeconomic trends, but it's another thing entirely to understand what they actually mean for everyday folks.
Exactly. We can talk about things like rising inflation and market volatility, but how does that actually translate into someone's ability to, say, pay their bills, save for retirement, or actually achieve those financial goals they've set?
You hit the nail on the head. It doesn't matter how strong the economy looks overall if individuals aren't equipped to manage their own finances effectively.
So what are some things our listeners can do to navigate this complex economic environment and protect themselves financially? Some practical steps they can take.
Well, I always come back to the basics, creating a budget and sticking to it.
It sounds simple, but
It is, but so many people skip this step. It's really the foundation of sound financial management. When you track your income and expenses, you see where your money's going, then you can identify areas where you might be able to save, make adjustments as needed.
especially with inflation still a concern, finding ways to stretch those dollars is so important right now.
Couldn't agree more. Another key step is building that emergency fund.
having some money tucked away for a rainy day.
Exactly. Ideally, 3 to 6 months worth of living expenses. That way, if something unexpected happens.
Job loss, medical bills, car repairs, life happens, right?
Exactly. That emergency fund acts as a safety net. It can really take the pressure off when those tough times hit.
Having that peace of mind is priceless. And of
Yeah.
course, we have to talk about investing.
We do. It can be a bit daunting for some people, especially with all the talk about market bubbles and potential corrections, but it's still one of the most powerful ways to build long-term wealth.
So how do you know where to put your money? There are so many options, and it can feel risky.
The key is diversification. Don't put all your eggs in one basket, as they say. Spread your investments across different asset classes: stocks, bonds, maybe real estate, even some alternative investments like precious metals.
That way, if one part of the market takes a hit, the others can help cushion the impact.
Exactly. And never underestimate the power of compounding. The sooner you start investing, even small amounts, the more time your money has to grow. It can really snowball over time.
There's that saying, time in the market beats timing the market.
I love that one. Trying to predict the perfect time to buy or sell, it's practically impossible. You'll drive yourself crazy. Much better to invest consistently over time, ride out those short-term market fluctuations.
It's a marathon, not a sprint.
Precisely. And it's important to remember, investing isn't just about accumulating wealth for wealth's sake. It's about achieving your goals.
Buying a home, retiring comfortably, maybe helping your kids with college.
Whatever those goals are, your investment strategy should be aligned with them. And with your risk tolerance, of course. Some people are comfortable with more risk, some are more conservative. There's no one right answer.
It's a very personal thing. It's about finding what works for you.
Exactly. And sometimes, it's helpful to bring in a professional. A financial advisor can be a great resource.
Especially if you're dealing with more complex stuff like retirement planning or estate management.
They can provide that personalized guidance, help you create a solid plan, answer your questions, take some of the guesswork out of it.
That could be a huge relief. It's easy to feel overwhelmed with all the financial stuff.
It can be, but with the right tools and support, it doesn't have to be.
So even though we see some uncertainties in the economic outlook for 2025, there are things individuals can do to protect themselves financially, work towards their goals.
Absolutely. Being informed, staying proactive, being disciplined with your finances, these are all key. You can weather the storms and come out stronger on the other side.
Knowledge is power, as they say. Understanding those economic trends, getting good advice, these can help you make informed decisions. Take control of your financial future.
Well said. I'd encourage our listeners to keep exploring these topics. Keep that curiosity about the world of finance alive.
It's been a great conversation. Thanks for joining us for this deep dive into the economic landscape for 2025.
It's been a pleasure.
We hope you found it informative and insightful. And remember, if you want more in-depth analysis and financial guidance, be sure to subscribe to our channel and like this video.
We really appreciate your support.
Until next time, stay informed, stay engaged, and stay ahead.